On Sunday, August the 3rd, OPEC did go ahead and approve another big increase in production for the month of September. The following episode was recorded on Saturday, August 2nd. Hey, everybody, we got a lot of interesting information to get through this week, but probably the most interesting thing is the information we don't have as of this recording. OPEC is meeting this week to discuss another increase in production. Now, the market fully expects another 548,000 barrel per day increase in production for the month of September over August, but it's Saturday afternoon and we don't have any information yet. I mean, there was that one headline coming out saying that they've pretty much agreed in principle to an increase, but no headlines yet. And that's very different than what we've previously seen. Usually by the time I wake up and get out of bed on Saturday, when these meetings take place, there's already headlines out about how they've agreed about everything and kind of put their words around it and how they want to phrase it and everything like that. But this week we just have sort of this one headline, nothing up on their website yet. So that's interesting, and I think some of the things we're going to talk about in in the episode today, maybe that's what OPEC's looking at too, and maybe that's why some of them are sort of dragging their feet. But anyway, let's get into it. My name's Aaron Kildow. I've got 30 years of experience in oil trading and analytics, and I'm here to elevate your understanding of the oil market. So let's cut right to our presentation this week. So as usual, let's start out with a chart of where prices have been. So far this week, we had a pretty big range. We did end up higher on the week. We tested $70, actually settling there one day. So that's interesting. Again, $70 is an important level to me. I think that's the Goldilocks price, at least on the front of the curve, where producers are still happy, end users are still happy. So I think that kind of keeps everything going. Demand should be reasonably good at that price. Retail prices, as we'll see here at the end of the presentation, have been super flat this year and well below year ago type levels, at least on the gasoline side. So you would think $70 would just sort of make everyone happy, like a good sort of Goldilocks price. But I don't know, we tested up there and we failed this week. We'll see what will happen. I've illustrated this horizontal support line before, which seems to be somewhat pivotal. We did end up settling above that mark. So would think that would be somewhat supportive, maybe bring some buyers back into this market. If you saw last week's episode, I sort of wondered out loud where the next buyer's going to come from. Well, Trump gave us the answer the next day on Monday, announcing the agreement he made with the European Union that they would be taking, $750 billion worth of energy imports through 2028. We'll probably do a different episode on that. It's in itself, because those are just crazy numbers. The EU is also supposed to invest something like $600 billion in the US in different infrastructure or, production capacity or whatever in the US. And so just some crazy numbers, and the market got very excited about that and ran up. So it went up $5 in the first 3 days of the week. And then as the market started looking at, headlines about, again, Trump saying he's not happy with Russia and maybe puts more sanctions on Russia, worried about what OPEC's going to do, what they're going to decide, that sort of thing. Market came back sort of $2 between Thursday and Friday. And so we ended up, up a good $3 on the week. So, fairly supportive from that level. And again, like I said, we settled above this trendline support. So just from a purely technical level, you would think that would be fairly good as well. So we'll see what happens here next week. I think the way OPEC phrases whatever they're going to decide will probably be pretty pivotal in what's going to happen with prices next week. But we're just going to have to wait and see on that front. But one of the things we were looking at, we got the monthly data came out on Thursday, the last day of the month. The DOE puts the monthly data out. The monthly data is much more reliable than the weekly data. The weekly data is good because it's weekly data. You can sort of get your arms around it pretty quickly. But there's a lot of assumptions being made. at least compared to the data in the monthly report. So in the monthly report, the DOE dig in much more to where the barrels actually went, where they ended up getting consumed, all of this sort of thing. So tracking things down a little bit more. And so these numbers that come out of the monthly report, again, are probably more reliable. The problem is the data that just came out is for the month of May. So how impactful will that be on the market? Well, maybe this month it'll be a little more impactful. If you can see overall, total demand was down uh, month on month. Sorry, not month on month. Year on year, total demand was down, especially gasoline. That's what really sticks out here. This big yellow section, really sticks out like a sore thumb. So maybe one little caveat is last May, gasoline demand looked really strong, like way above the 5-year range sort of thing. This year, it actually came in closer to the very top of the 5-year range, but this year on year comparison is what's maybe giving people some pause. And then the only thing that actually ended up being a little bit stronger year on year was this NGL section. So just a slight increase there on NGLs. So again, that's not fantastic. Again, if you go to my website, theoilbalance.com, there's a button that says add me to your distribution list, and I'll send you the full chart pack, and you can see in more detail these demand numbers and where they're coming from and sort of how they compare, to previous ranges, how they compare to the 5-year range, that sort of thing, and maybe get a little bit more context to this. But this number as it stands should probably be a pretty big flag, and it makes me wonder if that's something that OPEC was maybe talking about in their meeting about whether or not to raise production again. So I've talked about that a lot. I'll talk about that a little bit more, I guess, as we go on. But there's some definite headwinds coming up here for OPEC plus. So one of those things that maybe make you scratch your head a little bit, I pulled this directly off of the July OPEC oil market report, monthly oil market report, and it shows OECD commercial stocks increasing. Kind of flat maybe through the first quarter of the year, April down a little bit, and then May going back up. So total commercial oil stocks, that's going to be crude oil, gasoline, diesel fuel, jet fuel, residual fuel, all that fun stuff. So that was actually going up. If you look at the Jody data, which I'll show you sort of a different way of looking at it here in a minute, that had crude oil stocks going up. If you look at the table that sort of goes with this little chart that again comes from that OPEC report for the month of that was released in the month of July, it shows crude stocks in OECD up something like 15 million barrels, and then gasoline, distillate, all the other stuff up 20 million barrels during the month of May versus April. So again, that if you recall, that's when they really started to increase production, or they're trying to bring those barrels back from the market that they voluntarily took off the market. It just makes you maybe scratch your head a little bit and say, why would you be, and the whole time they were talking about OECD stocks being low, which granted they are towards the bottom end of the 5-year range here, this sort of shaded area, if you will. But you would think that, if you were going to try to bring barrels back into the market, you'd probably want to see inventories decreasing, not increasing. So maybe that's part of what they're talking about. They saw the U.S. demand numbers not great year on year. They see an increase in OECD oil stocks up month on month. And looks like year on year, we're still a bit of a deficit, but these inventories going up in a time previously, last year they were sort of flattish, and in 2023 they were down April into May. So again, a little bit of a head scratcher there. Maybe that's what's giving them pause with this meeting a little bit. So we'll see what their actual wording is when they make a decision and when that comes out. Keep in mind too, we're just talking about OECD here, and OPEC does that a lot too, is they'll talk about OECD crude stocks. Really what that is it's the West, right? It's Western Europe, it's the US. Yes, it's Japan and Korea in the Far East, but it does not include China. It does not include India. So some of the places where you would expect the big growth, where they've got a huge population base, maybe things that are more driving the marginal barrel in the market, is not included in these OECD numbers yet. That's what OPEC likes to display and likes to put their sort of rhetoric around. Of course, in the monthly oil market reports, they do go down. They break down Chinese demand, they break down Indian demand, and that sort of thing. So they're perfectly aware of it. But in a lot of the commentary that you see coming out around sort of these production increases and whatnot, they'll just simply refer to OECD stocks. So another couple of things here. I've talked about this before. The Petro-Logistics numbers. We're seeing much higher production numbers coming out of the Petro-Logistics group. So again, they're tracking vessels, they're tracking movements of oil and trying to tie that back to what production would need to be to make that happen. Of course, they're looking at inventory and that sort of thing too. Down here in the blue is what OPEC is reporting, which is a much lower number. And again, we could go through and break down where exactly those differences are, but then there are some countries that really stand out, where Petro-Logistics is tracking barrels back to countries that are reporting much lower production within sort of the OPEC, the OPEC playbook, if you will, or the internal numbers that OPEC is using. But what I think was interesting is that Petro-Logistics has that production number really flat month on month, kind of tapering off here a little bit. If we look over here on this other chart, we've got the OPEC plus changes, as well as the Jody OECD crude inventory. So Jody is a different reporting body than what we saw in the previous chart that OPEC sort of puts together through several different sources. Jody is sort of a more voluntary online website that you can go to yourself and pull these numbers out if you wanted to. But they were, at any rate, they're similar numbers. They're not exactly the same. They don't exactly line up, but they usually go in similar directions, I guess is the easy way to say it. And it's much easier to pull this long-term Jody data than it is to pull the OPEC numbers. But at any rate, if you just look at the month-on-month change in inventories, again, the Jody data was pretty flat here from April to May. And if you look at the export numbers coming from Petro-Logistics, they had exports swinging all over the place. So I've said a few times before, it's not production numbers are important, which is what this chart is over here, looking at OPEC plus production from a couple different directions. So obviously, if you're going to increase production, you're probably going to increase exports as well. Not necessarily in the summertime, but it seems like it would go together. But this blue line over here from Petro-Logistics is just tracking the exports out of the country. So this is much more impactful on the actual inventories of the rest of the world. So again, we're not looking at China, we're not looking at India, we're just saying of the OECD countries, they had inventories going pretty flat after this big drop in exports, at least month on month change. After they got really big in March and then sort of came down here into April. So I found that interesting. I wanted to sort of point that out to you. So again, that might be something that OPEC is looking at and talking about at these meetings, trying to figure out, because obviously it was a harder decision this time, right? Because the decision hasn't been made yet, whereas the last couple of times they had, by this time of the day, they had already, been out and probably made their decision early in the morning, at least in our time in Texas, and then sort of went on about their day after that. But a couple important things, as we said, the front end of crude oil hit $70 on the first, on Wednesday, Tuesday, Wednesday of this past week, and it certainly looked like it brought in some more producer flow into the market on both crude oil and on the NGLs as well. A little bit different timing on the NGLs, but you see total volume on the NGLs sort of towards the middle of the month, around the 18th, 19th, really spiked up here. And then again, we had another big increase early in the week, the 24th. So, again, a lot of or a lot of volume going through the market, which is usually suggestive of producer hedging coming in. On the crude side, it's a little bit more clear cut, where you see on Tuesday, we had this big update here, if you can see that. And you had prices go up too for Cal. The Cal number went up pretty high as well. So at any rate, you can see the open interest in Cal 26 on WTI really took off too, especially on Thursday, which was interesting. It really spiked up quite a bit. So even as prices came down, you had open interest go up, which again tends to happen sometimes, that the producers like the way the price direction is going, the market's going up. They start really thinking about hedging. They put in their orders maybe a little bit above the market. The market never quite gets all the way up to where they're hoping it would, and then the next day the market comes off a little bit and they're like, well, we should probably lock something in on this opportunity. And you can see, sort of the last several days, prices being up here versus down here, where they had been. Sorry if you can see that. So prices had been, sort of in the $64 range, then we pop up into 66, 67. And if it comes off a little bit, yeah, you're probably trying to lock in those extra $2. So that's not totally, that's not completely unusual, that sort of activity. And then lastly, on the retail prices, as I was saying, we still are pretty much mirroring year ago type levels on the diesel prices. Just from personal experience, they seem to be bouncing around quite a bit here in at least my area of Texas recently. It looked for a while like they'd be below $3, but now sort of bouncing up anywhere between sort of, 309, 320, somewhere in that range. Gasoline's just been sideways for a long time, right? So it's pretty incredible how flat the gasoline market has been in terms of retail prices anyway so far this year. All right, so here's the recap for those of you who like when I put the recap in there. We're still waiting on the OPEC agreement to come out to sort of be finalized. Again, I would like to see in more detail what they're talking about, maybe what the hesitation is. As I mentioned in previous iterations of these sort of meetings, they've come out pretty quickly on Saturday morning and had a result for us. And, the result was they're going to increase production, right, each time. This time it's taking a little bit more time. So I really hope with their press release and other, maybe there'll be some reporters able to get some more information. But what the holdup is, what the hesitation is for increasing, probably for now, still assuming that the market is correct and thinking that they're going to increase production. And at least just know that going into Monday, that the market expectation was for them to increase by 550,000 barrels per day. Again, I don't think it's a great idea increasing production into a shoulder period. I think that's pretty dangerous, and especially with the demand figures that just came out on the U.S. side, maybe that's what some of the hesitation is. So hopefully we'll see with their press releases and whatnot coming out. If you like this video, please like and subscribe. I'm also thinking about talking more about day trading. If you would think that would be interesting, please let me know. Type it in the comments below. Go to our website, theoilbalance.com. Click on that "Add Me to Your Distribution List" button. You can interact with me that way through email. If that would be something you'd like to see, at least how I use the information in these chart packs to trade, what sort of things I'm looking for in terms of trading. I don't exactly day trade, but I think I can help a lot of people that do if they are looking at the oil markets and that sort of thing. So reach out and let me know what you think on that front. And please consider subscribing to the Elevate Your Understanding subscription from theoilbalance.com, and you would get a lot more detail about the things we just went through in this short video. So have a great week. We'll talk to you later. If we have some sort of update from OPEC, I'll come out and let you know what that is, especially if it's different than market expectations. So talk to you later. Bye.